Morning, y'all. Yeah. I like to listen to heavy metal music, and I like the foam on my cappuccino frothy. Yeah, boys! All right, you guys ready to go? Happy day, happy Friday. Good morning, Twitch. Good morning, Facebook. Good morning, YouTube. Let's get on with it. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I feel like doing the old disclaimer that I did back in 2004. Welcome to Forex.Today. Let me remind you that the purpose of Forex.Today is education. This is not an alert service. I am not here to make trade recommendations. However, I will teach technical and fundamental analysis in real time with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. How'd you like to say that every day for 20 years? So good morning, my name is Wayne McDonald. I am a currency trader and I love currency trading. I use technical analysis and fundamental analysis, so we can cover those today. So please ask questions. Get involved. Participation is the key to success. Please treat your fellow currency traders in the chat with dignity and respect. This is our offices. So if you're a heckler, disappear. If you're trying to scam us on something, we're not interested. And what else? Take notes, ask questions, like, subscribe, comment. I've always recommended that in the comments of the recordings, you should leave what you learned during the live webinar or what you learned during the recording and document what you learned. So you can say, hey, Wayne, thanks. Or you could say, well, in this video, I learned about this, and this. Because the upside to that is you can go and search your comments and find particular videos that had an impact on you. Okay, so just sort of organize. I'd like to thank Traders Way that sponsors Forex.Today, our wonderful community of 15,500-ish currency traders all around the world. We like to get together this time of day to align the satellites, synchronize our watches. Okay, and Traders Way has a belief. Their belief is that an educated trader has a better chance at actually surviving as a currency trader, which means they can trade not just a few days and then blow up their trading account because they're degenerate gamblers or something, but instead they can put together technical and fundamental analysis on multiple time frames and make good choices on how to trade and how to invest and how to manage their risk properly so that they trade for days and weeks and months and years. And when you're a foreign exchange broker, you're offering this service like, hey, if you pull the trigger, we'll execute your trades, right? So the longer you stay a trader, the better. And of course, if you're profitable, you'll trade forever. So anyways, they're like, hey, Wayne, can you help educate clients so that they have a better chance? Yeah. Now, their business model now is based on you paying it back. They're investing into you up front so that you have a better chance of surviving and succeeding. And then hopefully you pay it back by choosing someone that's, basically building a business partnership with someone that has already invested into the relationship. So you can start today by visiting tradersway.com, opening up a demo account. Download MT4 or MT5 or CTrader. Play some demo trades. Check out the fast execution speed, the narrow spreads, the wide swaps. If you need world-class customer service, they have they roll out red carpet and they have butlers with white gloves and they're like, how can we help you, madam? Right? So anyways, tradersway.com. Thank you, tradersway.com. So I spent some time earlier reading documents from the South African Reserve Bank, the Central Bank of South Africa. Kenneth wants me to go over how to set up the fib levels of the way I do it. Yeah, sure, I'll do that again for you. Okay, so we have a central bank. Their interest rates are set at 3.5%. So there's a nice carry you can earn on tradersway.com. So I thought I'd take a look at that. Currently, they have CPI of 3.2%. The Fed would be ecstatic to get 2%. So we'll have to check out if that's good inflation or bad inflation. The interesting thing here is the PPI is very low. So the input costs are much lower than the headline. So there's inefficiency in here. Okay, usually you'll get PPI and CPI are quite similar. So if you don't know the difference of the two, one is sort of the factory owner's cost of building widgets. And then CPI is the cost of widgets to consumers. So like they're building widgets for cheap relative to the cost of selling them. Like, but why? What's the relationship? Google median. There's median, there's mean, and there's mode. Okay? So Google it, but ultimately it doesn't matter. Okay. All right. So yeah, so interesting stuff. So I did some deep diving in here and check it out. COVID did not have a positive impact on the economy. Yeah, no doubt. However, South Africa's terms of trade remain robust. Commodity export prices are high. Okay, the stuff they sell to foreigners, right? The stuff they're selling. Think of South Africa as a business. They sell stuff, okay, to countries around the world, right? So they're selling stuff and those prices are high. Because remember, COVID shut the production of natural resources down and whatever inventories were available have been gobbled up. And now there's a shortage of stuff. So I think I told you, I was talking to a contractor that I wanted to do a project in the house with, and I thought he was a little pricey. So, I let him sit and stew for a month and a half or 2 months. And then I contacted him and I'm like, yeah, I'm ready to go on this project, but your price is too high, right? And he's like, hey, dude, don't negotiate with me. My costs have gone up 30%. So if you want to do the project, I'll do it, but I ain't coming down on price. So the cost of his material, not labor, right? Not his markup. The cost of the material has gone up materially. So anyways, you can look at that. Well, whoever's got the materials and can sell them, those prices are high. Okay. Well, in that same period, one of the major imports that South Africa has is oil. And that went down. Okay. The rand depreciated by 14.5%. Okay. And remains below its estimated long-run equilibrium value. Okay. Even though it's already started the appreciation process. What does that mean to you? What is the Reserve Bank of South Africa, the South African Reserve Bank? What are they telling us? Connect the dots. Hmm? How about this? If you don't know, type in a question mark. It's undervalued, yeah. Which, say it different. You're right, Adam, but say it differently. Like, undervalued is present tense or past tense, even. So say it with sort of a future projection. In the future, the Central Bank of South Africa expects the value of their currency to do what in the near future? They're projecting it's going to go up in value. They expect their currency to appreciate. They're saying it's depreciated already by 14.5%, but it's already on the rebound. Check this out. Okay. It's at 17 where several weeks ago it was already 18. So it's already appreciating. Risks to growth outlook are assessed to be balanced. I think that's all I needed to look at today. Okay, they're recovering. All right, so now I wanted to show you some other stuff here. By the way, their reports, I've gone through several of the reports, and it's like they got, it's sort of like undergrad students putting the reports together. So like there's these giant gaps, which I guess is okay, but look at this. Now they're squeezing charts in to their PDF, and it doesn't fit right, so they just squeeze it and skew it all up so it's hard to read. It's like, come on, dude. Come on, do your reports right. And there's a couple other charts like, where's the periods, right? But they put the period way at the bottom. But when you're looking at this, you're like, what period are we talking about? What, like, label the chart better. They label the chart down in here. So I'm like, come on, South Africa. Come on, dude. I can barely read this. So anyways, trade balance. Okay. Which one did I want to talk about? So South Africa should be exporting more than they import. And for years and years and years and years, they have not been. So that's one sign of a poor economy, especially an exporting poor economy. South Africa imports more than they export, which is really strange. They should be exporting a lot more. But like, that's what makes me scratch my head. Like, South Africa imports lumber from the United States. And I'm like, what? Importing lumber from an American lumber distributor and then having that put on a ship, travel halfway across the world, and then you have to unload it and then sell it? Like, that's better? That's a better process? Like, that's weird, right? Like, how could that be better? So you can see in here, there's some trouble in the South African economy. For an exporting nation, this should be well above the zero line. And just recently it popped up. And this is, this had to do with COVID. Okay. This had to do with COVID. So it's kind of interesting to see that. That's the first time it's happened since 2003. What part, Marina? the what part I missed it? I'm sorry. This stupid setup now has the chat way on the other side of the screen. So prices have gone up for the stuff they're exporting, and they've been importing less. Balance of goods and services. So like, yeah, anyways. Huge deficit here, right? So this is literally South African office buildings being emptied because of COVID. Okay, so less exports there. Anyways, there was something here, and I'm trying to volume of exports and imports. Check that out, huh? Crazy. You had to create a whole different map, right? Shoot, I had something I want to talk about in here, and I don't remember what it was now. The value of merchandise exports decreased substantially more than imports. So anyways, Google it, go to the website. There's tons of great reports, by the way. Okay, you could spend certainly hours on this website today. Okay, now remember, we're analyzing, like this is fundamental analysis that we're doing. We want to know when exports normalize and imports normalize, because we're trying to understand and discern when the global economy has normalized, and we can go back to typical trends. But also, isn't it interesting as a currency trader when a central bank says they expect the value of their currency to appreciate? Like they're telling you to buy South African Rand. Okay. So they had an interest rate decision 2 days ago. Maybe you want to read the report, because in the report, it might just tell you what they expect interest rates to be, let's say, next year. Oh, the interest rate decision? Yeah. So that's on the website, by the way. So now let's say you don't want to trade South African Rand, although it's a great currency and it pays you a huge swap. And ultimately, though, you could use it as one gauge of global macroeconomics. Now, when foreign direct investment also returns to South Africa, when foreigners start to invest because they want to improve the efficiency of the South African economy and get higher, return on equity or profit margins, if you will, then also that will continue to appreciate that currency. Okay. So we're at today's sell zone, USD versus South Africa. So down means up. And if you don't understand that, watch cars. Turn left to turn right. So check this out. Just this is the week here. Okay, this is Friday, Thursday. No, that's Monday. It's Friday today, right? I must have, is this weekly? No. 1876. I get all my days mixed up. So this is, let's redo it. Friday, Thursday, Wednesday, Tuesday, Monday. Down, 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 up, up, down, 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 up, up, right? Down, 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 up, up. Down, 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 So you have to decide, is this going to be a longer term play? You'll see that that helped us breach the support line. But also, would it help you to know that the Central Bank of South Africa expects over the period, let's say over 6 months, let's say, that the South African rand will continue to appreciate. Okay? It was at 1950. Okay? Then 18. Okay? And we broke 17 last week, I guess, right? And we're on our way to 16. So what's your outlook? Are we on our way to 15 and 14? What do you think the appropriate, fair, balanced price is? Well, that's our job, right? So one thing that we could do here is your mean, median, and mode idea. Okay. You could argue on the short run here, or if you want to go, right, that it could be 15. Depends on how far back you want to go. Okay, that's down to 2015. Okay. I don't know how far back you want to go. Probably even farther back. I don't think I have that kind of data. So, if you feel that the trend of rand appreciation will continue, partially because the South African Central Bank believes it will, then now you have a focus for a trading strategy. Adam says, yeah, rand is one of the only places you can get a good swap. The other one is peso. Okay. And remind yourself, much of what's affecting the value of this no, I should restate it. The macroeconomics that affect the value of the South African rand is the same, or generally the same, macroeconomics that affects the value of the Mexican peso. Now, the governments and the geopolitical risk and all that they're obviously quite different. Okay? Mexico's largest trading partner is America. So a happy America means a weak U.S. dollar. Okay? Looks like I'm going to be in Mexico in the spring. Real vacation. So that means I'll be buying some peso and driving up the value of the Mexican peso. Bitcoin. Peccary, Bitcoin. Yeah, Moreno's like, Who will invest into a country with no electricity and lots of crime? Yeah. And it seems to me that someone built a giant nuclear power plant in the middle of Johannesburg. That's one thing surprising right away. You're like, what the hell is that huge thing over there? Oh, that's a nuclear power plant. In the middle of the city? Right? You're like, what? And then someone says, no, it's cool. The Russians built it. Like the Russians. Oh no. You're like, didn't you read about Chernobyl? Didn't you watch the anyways. But anyways. I should speak nicely of Johannesburg because I like Johannesburg. But yeah, power outage goes out. How could you lose power when you got a nuclear power plant? So, anyways, this is another flow of money, but it also offers quite a large swap. Okay. There was a time in the past when Carstens was in charge of the Bank of Mexico. And I would actually download his reports and his presentations, and I don't speak Spanish, but I would read it anyways. See? There's a proper report. Thank you, Bank of Mexico. No charts, though. They're like, we don't like charts. You have to squeeze them in. Purchasing managers in PMI. So PMI is recovered. See? In the United States, in the United Kingdom, in Japan, in Euro. See, they're giving their lots of great information that has nothing to do with the Bank of Mexico. Look how beautiful that is. UK, Canada, Japan, Euro area, America. Reference rates and implied trajectories in OIS curves. Very neat. It's the fixed floating interest rate swap where fixed interest rates is the effective overnight reference rate. Anyways, check this out. Change in financial indicators, currencies. Look at that. Very cool. Beautiful, huh? South Africa, wink, wink, nudge, nudge. Mexico's got better central banking charts and reports. So they have it Mexican peso over dollar, not dollar over Mexican peso. You pay attention to that. Mexican peso exchange rate with moving averages. Okay, they're going to tell you what they think the future is going to be like. They're talking about interest rates. They're talking about currency values. They're talking about global macroeconomics based on the studies that their PhDs are doing for you for free. As to the expectations regarding the path of the monetary policy target rate, the 60% probability of a 50 basis point cut for the monetary policy decision in August. The median surveyed forecasts 4.5%. Manufacturing exports, remember exporting to the United States primarily. Also, Mexico does export a lot of oil. Okay. Look at all this beautiful stuff. Industrial activity, economic activity indicators. So we're looking at more of the normalization. So there's agriculture, services, industrial production. Look how beautiful this is. Employment rate, productivity, and unit labor costs for the manufacturing sector. You're right. The better the numbers, the more the United States will want to invest and hire. CPI, changes in CPI. Okay. Isn't that amazing? Thank you, Mexico. Muy bien. We have central bankers and PhDs and quants writing all these reports, doing all the research, and giving us incredibly valuable information to predict the future between now and the next, like, let's say the next 12 to 18 months. Exactly, Adam. And yet we know 95% of retail Forex traders don't do this. Maybe 99%. Okay? Okay? You could spend hours just on this website now. Look at the foreign exchange market portal. Yeah, boy! Awesome, right? And also that should motivate the South Africans. Come on. Mexico's kicking your butt as far as the presentation of their monetary policy and the quality of their reporting. Okay, cool, right? So again, I'm trying to inspire you to take a little bit deeper dive and also ensure that you're thinking about your trading as a business and as a profession. Yeah, the Mexicans have better gangs too. Come on. All right, so interesting. You know, it's Friday Inspiration Day, I guess. Okay. Yeah, well, I don't mean in this exact moment, right? I'm saying that many people don't even look. Let's do it this way. They don't even look at this pair. Okay? And one reason they won't even consider the trade is because they'll say, "Wow, the swap is like 50 pips." Well, in terms of peso. So if, let's say, if the spread, not in pip wise, but if the spread in dollar terms, if the spread cost you, let's say it cost $30 to trade euro dollar, and it was $40 to trade Mexican peso, yes, there is a difference in spread, but it's 1 pip. Would that, in dollar terms, right? Would that prevent you from going in a good trade that will offer you a higher yield? Now remember, your swap on the US dollar is essentially zero right now, but Mexico is paying you for the investment you're making into their economy. They're paying you handsomely. And South Africa will do the same. South Africa has to pay you more because they are riskier than Mexico. If they were not considered riskier than Mexico, then they would have a lower swap rate than Mexico. That's just how it works. More risk, right? More reward to compensate for the risk. So think about what we actually do. Okay, we trade foreign exchange. Okay, great. But then how does that happen? Well, money has to cross a border for it to change in value. And so now you have to think about that, which is bigger than your 15-minute chart. But then ultimately, what is it that we're doing if we're holding our trades longer? You are actually lending Mexico money. You're lending South Africa money. Okay? Whatever you're buying, you're actually lending. You're a lender. You're an international financier. So the mechanism here, again, is that I use some cash in my trading account at Trader's Way as collateral. Trader's Way, because we trade cash and cash is liquid, has the ability to go out and get you, let's say, 100-to-1 leverage on your collateral. Okay? Now, an illiquid asset, you would get a lot less, right? But because we're liquid, right, you can get 100-to-1, let's say. Or if you're using an American broker, 50-to-1, right? But either way, it's an amazing leverage. Not 5-to-1 like a mortgage, 50-to-1. Okay? So anyways, so you put up a little bit of collateral, and Trader's Way allows you to play with a big pool of cash now. Or you can have access to that cash and then invest it into Mexico. Essentially what you're doing is you're buying government bonds, Mexican government bonds, right? You can think of it that way. So now you have this loan that you made to Mexico. They pay you interest on your loan to them. That's what a swap is. Now, you also, if you're not the only person on the planet lending money to Mexico, but you're lending money to Mexico because you believe the economy is getting healthier and healthier, and you believe the next 2, 3, 4 years has a positive outlook, then not only are you collecting interest on the loan you made to Mexico, right? Think of it almost like a foreign direct investment. You're directly lending Mexico money, and they use that to improve their economy. But if their economy is improving, there's going to be more demand for Mexican peso. Think of it like American companies are going to hire more Mexican workers to make more stuff to import back into the United States. Well, to do that, they have to buy a Mexican peso, which that whole process of American companies moving, doing more business and more investing and more hiring and more manufacturing and stuff in Mexico, what that does is the US dollar crosses the American or the Mexican border, weakening the US dollar and increasing the value of the Mexican peso. But that's what you're doing too. Okay? But for different reasons. So American companies want to do more business in Mexico because the American economy is doing better. Okay? Cool. So now you have the dual powers working for you. Now you have if you think of your bond as an asset because you gave up cash to own an asset, right? So your balance sheet is still balanced, right? Right? So you collect this income now, your interest payments from Mexico, and you collect it every day, by the way. Better than a bond that only pays you, once or twice a year. Now you get paid every day. You got this income. But also you have the dual force of asset appreciation, because there's more and more demand for Mexican peso. And you knew that because of the fundamental analysis you did, things like listening to the Central Bank of Mexico. Okay? So when you put that all together, you have capital appreciation of your asset. Your asset goes up in value, the value of your bond, because you're getting paid in peso, right? Now, the thing is, you leveraged up. So you essentially took a loan. Okay, you put up some collateral and you took some loan in dollar. So you have to pay your 0.25%. But you might be lending it to Mexico and getting significantly more than 0.25% from them. And that's what a carry is. two swaps. Okay, you're collecting interest on a loan you made, but you're also paying interest on the loan you took. But if you're earning, let's say, 1.25% from Mexico, but you're paying 0.25 for your US dollar loan that you took out, the difference, the carry, right? Think of it as arbitrage. You're you're collecting 1.25 in income. You have then you have a quarter in expenses, and your profit is the 1%. Okay. Now the cool thing is now your internal rate of return is not 1% but 100%, because you're making 1% on the loan you made and took, the arbitrage between the two, because you're essentially selling your money and whatever. So if you think of it as arbitrage, right, it's on the asset, right, not on your cash. So using our numbers like that, at the end of the year, you would have collected $100 worth of interest from, right? The differential between your cost and your income means you would have collected, in that example, $100 in interest payments. And you're like, well, Wayne, that's not that big of a deal. It's only $100. Well, you only put up $100. So what's your internal rate of return? 100%. Okay, you see that? It's interesting. And you get paid every day, and you remain liquid, and you can jam your stop. With a bond, you don't get paid every day. You collect an interest payment a couple of times a year, but you don't get your money back until the bond matures, or you sell the bond to somebody else. Well, in Forex, you just move your stop to break even, and now you're like, boom, okay? And then when you cash out, you get your money back, okay? But you're collecting your income every day. And you can, oh, and here's the other thing. Because you're mark to market, you can trade the value of your assets appreciation. In the stock market, if you bought a stock at $10 and now it's worth $20, you can't trade the paper money, right? The difference, right? You can't, there isn't $10 more in your account because the share went up $10. No. It's like paper value. You don't get the money until you sell it. In Forex, you don't have to get out of the position. And you can trade that appreciation. It's gorgeous. It's like the thing. Like, why should you be a Forex trader? That's one of the major things. Oh my God. Okay? Okay. Neat, right? All right. Interesting. Just again, food for thought, thinking bigger. Let's take a look at the indices. Are you guys, was yesterday's video on relative strength exercises, was that helpful? Did anyone go back and watch it again? On says you have to hold the trade overnight to be paid a swap. Well, technically that's not true. You have to hold it at rollover on. So technically on, you only have to hold it for 1 minute to collect 24 hours worth of interest. Also on Wednesday, you get paid for, Saturday, Sunday, and Monday. So you can hold on Wednesday at 4:59, make the trade, and then it goes click, 5 o'clock. So you've held it less than 60 seconds. You can even hold it for 10 seconds. And at rollover, you get paid 3 days. 3 days worth of interest payments for your 14-second trade. Okay? Oh, right on, guys. Good. I'm glad I was helpful. Okay. Yen strong, dollar weak, that's good. Aussie weak, that's bad. Kiwi. So Kiwi dollar might be interesting. Kiwi Swissy. That's not a common one. Okay. Whoa, 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 whoa. Coming in hot. Look at this great OOP. Perfect OOP. Amazing OOP. Too bad I don't watch this. Too bad, so sad. Check this out. La 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 la. La 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 la. All right, so what are the components here that are interesting? One, when you're out of position, OOP, you stay bullish and you kick off the 4-hour 21, and you expect to hit your target early. We call that a hot and fast. And then we expect it to go down somewhere towards the central pivot. Okay? The role reversal held and then pushed it back up. Isn't that amazing? Okay? Amazing. Why do you get paid for 3 days for holding a trade for 14 seconds? It's the mechanism for which the accounting books are done in the back office. Okay? So I believe it's called Tom Next. So there's a 2-day settlement date. So your trades are not actually settled. It takes 2 days to settle. So you need some reconciliation. Okay? So even though you don't see it, it takes 2 days to do every single one of your trades from the back office point of view. Okay? So there's tomorrow and then the next day. So on you're supposed to be paid on Saturday. Let's do it this way. You're supposed to be paid on Saturday, except the markets are closed. You're supposed to be paid for Sunday, but the markets are closed. Okay? So then you have Monday, which is Friday's tomorrow, right? And then there's Tuesday, and then on Wednesday you get settled. It might be the other way of saying this might be T plus 3. It might be a 3-day. I think, no, that's what it is. That's where I got my math wrong. It's T plus 2, not tomorrow next. Tom next is probably stocks. So in the Forex market, it's not, instead of saying Tom, we say T plus 2. Oops. T plus 2 is the settlement. Okay? So now you get Saturday, Sunday. Okay, Monday, if you made the trade, right? If you made the trade Friday afternoon or whatever, it's T tomorrow plus 2. So Wednesday's close. But here's the thing. You can cheat. Okay? So most traders, their trades are not open. They trade it on Friday, they close it on Friday. So the little trick is the way that the accounting math, which is funny because accountants can't do math, they assume you've bought it and you're holding it, whatever. So on Wednesday at 4:59 p.m., and 38 seconds if you want, you can make the trade, and then it hits at 5, and at 5 it goes click, and it rewinds. Okay? And you get paid for this period. Okay? Because it's assuming, right? It's just assuming. So you collect interest for Saturday, Sunday, and Monday at Wednesday's close. So there was a time when you could make, 8%, let's say, 8% positive swap on a trade. Analyze that it's 800%, right? But some people that I knew traded this, and in fact, they got clever enough where they did rollover in Europe on European brokers out of Switzerland. And then they did rollover again in the United States as the United States rolled over on Wednesday. And this was especially true on long weekends now. So what if Monday's a holiday? Then on Thursday, you get interest for Saturday, Sunday, Monday, and Tuesday because of the holiday. Okay? And so what people would do, especially when you're leveraged at back in the day when you were leveraged 200 to 1, right? You would drop like, I knew somebody dropped $40,000 in cash, leveraged 200 to 1 on a long weekend Thursday rollover simply to get the swap. You get 4 days worth of interest in 22 seconds. I told him he was an idiot. I said, instead of tricking the system, why don't you learn what the system's doing? Okay? So it's just accounting, guys, which is interesting. It's interesting anyways. And then Kishkor says, does the spread widen at 449 or 459? Yeah, it can. Yeah, for sure. Because of rollover. So if you're a foreign exchange broker, you actually close the positions on the books and reopen the positions on the books. And back when I first started trading, right, they literally closed my trades and literally opened up again, which means you'd have to pay the spread again, right? And you were no longer truly, like literally they would close your trades. So that was sort of a weird function of Forex 20 years ago. And now, of course, they don't literally close your trades. Your trades that you put into the interbanking system, 8 days ago or 8 weeks ago, they're still in there, right? But on the accounting side of running the back office, the reconciliation, if you will, in the back office of a brokerage firm, on the books, they close it and open it. Okay, and that happens every day at 5 p.m. Now it's a new day. It's a beautiful day. Don't let it get away. Touch me, take me to that higher place. Please, my love, you know I'm not a hopeless case. And what you don't have, you don't need it now. You don't need it now, wow. All right, so anyways, pissy on the move. Interesting. Pound Swissy might, or not pissy, Kiwi Swissy. Let me invert this. Okay, good recovery here on the piggy. Piggy, can't you see? Sometimes your trades just hypnotize me. Just a mess. Just a mess. Just a mess. Aussie, any better here? Yeah, much better. I like the fact that it's holding up on the central. So I would treat it positively here. So for example, I can throw down my price action pivots. And if I'm interested in trading already, I'm not going to use 55. I can use 34, 21 and make it a little more sensitive. And that's kind of what I see right now. It was down, but now is up. I don't know if that's correct. Like, I can't say there's no bears above us. I mean, there clearly are bears above us. But bulls, and I'm a bull, are looking at it this way. Bears, on the other hand, are looking at it this way. Okay, so it's just who you are. Bears are thinking down, so a bear's going to sell high. We know that. It's so easy to know where people are going to sell. They sell high. And where do people buy? Oh, they buy low, right? Where's the support? You're like, oh, well, clearly there's support. Okay, so now if people are buying there and this is the point I'm making here, and we have a higher high, okay, then that would predict this. Cool. So between 66.30 and 66.000, if I were me, I would consider buying. Double bottom, higher high, higher low, and typically I don't call this a higher low, although it is a higher low. I call this a roll reversal, which implies up from here. Okay, double bottom, higher high, roll reversal, long and gone. Okay, what's the target? What's the target? Eh? Let me know the target. It's very specific. Give me the exact number.
Leaf filter is rolling into neighborhood.
$67. Anybody else? Huh? He's going to tell, he's going to tell, he's going to tell, he's going to... What movie is that? Oh, the curtains. Oh, yeah, that's what it is. The curtains, Castle Swamp, right? He's going to tell, he's going to tell, he's going to tell, he's going to tell. All right, I'm going to tell you exactly the number. Ciao. $69, Bubba. This is 65. On our way to 69. 65, 66, 67, 68, and then 69. Anyways. Okay. Because in September, we're not targeting R2, we're targeting R3. And we talked about that in February. I know, right? Doesn't look like it right now, but that's what you can think. No, Pekri, it's a zero-sum game. It literally, when you lose money, you have transferred your net worth to somebody else. Your net worth went down, their net worth went up. There is literally a matching process. That's what a spread is. So when there are very, very few people trading, when you want to make a trade, the broker has to go deeper and farther into the interbanking system to find someone to match you with. Because there's just, if you want to buy, there's just not enough sellers near, right? So you have to go a little farther. You have to go a pip or two, right? To find someone that is willing to sell it to you or buy it from you. Okay? So it's truly a zero-sum game. So think of it, the way I think of it, it is a competition. And I like to believe when I make a trade, I've done more research, I've done more work, I've made a better decision, and therefore I deserve to win. I deserve to make money because I out-hustled the other person. You got that? You deserve it. Okay? Now, it's only R3 under very specific circumstances, and anyone that's gone through the day trading course and the swing trading course, and I believe everyone that's done the swing trading course has done the day trading course, so anyone in my live group knows exactly why. Okay? Now, it doesn't look like it now. We don't know what it's going to do, but you should have proper expectations. And the proper expectations is R3 this month, not next month. Okay? July and August, we expect S1 to R1. S1 to R1. Didn't even get to S1. It actually closed on R1. Okay? And then S1 to R1. We expected that. Okay? Things like we expected this big move. All the smart money made money and exited right here. Okay? And we also knew that. Right? Can anyone concur? Because there's a lot of newer people here. Can anyone concur that in this period, we expected the hot and fast move and then the sudden and dramatic stop, and we knew exactly why, and we knew what day they were preparing for? Can anybody confirm that? We even used that wording, hot and fast, hit target early, full stop and reverse. Okay, I was on vacation in here and I exited a bunch of trades there. Then from that point, S1, R1 inside months, right? And then this month, not R1, S1, R3, S3. Right? So all we we don't know the future, but we're trying to predict human behavior. Okay? So it's not that, I'm not trying to say that I'm right. What I'm trying to say to you is that this is not a video game. It's not Fortnite. The other characters are not fake. This is not artificial intelligence. These are people. And like someone else asked, who's on the other side of your trade? Oh, Peccary asked about who's on the other side of your trade. Another human, and they're emotional. Okay? And because of that, we have a chance to understand their reasoning and their behavior. And the better you get at that, it's not that like the better you get at it, the more profitable you'll be, but instead, the better you get at understanding the market, the better you can prepare yourself for what might come and be ready for what you think will come. You see? So I don't see anything that says up at the moment, except that's what I think. Now, I don't have to be right, I have to be ready. Okay? Because it's a timing issue, and we talked about that in the live group last night. The most interesting part of all of this, because it is somewhat predictable, the most interesting part is at what time frame do you make your trades or investments? So I'm a bull here, but what if I was a bear? Well, I know this is a sell for me. I know this is a sell for me. I know this is a sell. That didn't work out very well, but this one worked out okay. And I might have sold here and I was right for a week and a half, 2 weeks, and and so on and so forth. All of this, I can be profitable as a bear. This is a 4-hour chart, so a lot of these bearish setups were profitable for days. Probably, I'd say 100 pips on average each. And I would argue being bearish on this pair is wrong. It doesn't matter about right or wrong. There is no right or wrong. There's with the trend and against the trend. I try to find the trend first through fundamentals to help me understand why. And then I use technicals to confirm or deny that trend. So I'll say, well, based on what I think this is supposed to go up. Now, we haven't been really trading Aussie Swiss franc, but back in, what was it, the end of April? The RBA, the Reserve Bank of Australia, told me, they called me on my cell phone. And they said, Wayne, the Aussie dollar depreciation is over. And I said, oh, cool, thanks, that's really helpful. Now, of course, they didn't call me, but what did they do? They wrote it down and they did a press conference. So they told me and they wrote it down for me. So why is it that retail Forex traders fail to listen or read? I just showed you the South African Central Bank told us the Rand is going to go up in value. The RBA told us that the Australian dollar will stop weakening. The Federal Reserve Bank of the United States says the dollar will weaken for years and years and years and years. Then you turn on the TV and there's some idiot telling you why the dollar is going to get strong again. Why? Why make it so complicated? You say, well, Wayne, I don't have a master's degree in macroeconomics, or I don't have a degree in macroeconomics. I do, so cool. Ask questions. I'll teach. I'll preach to teach. I'll teach you. Okay? And I know you can learn macroeconomics because even though I do have a degree in macroeconomics, I knew macroeconomics before I got the degree. So I taught myself macroeconomics, and now I can prove it. Because someone's like, well, how do I know you know macroeconomics? Oh, I have a degree in macroeconomics from Harvard. Okay, and that ends the conversation. But the funny thing is, I knew macroeconomics before I got the degree. So now I know you can learn macroeconomics without the degree. Pure mathematics is high school economics enough? Well, it depends. So my kids are not even in high school yet, and my son's doing calculus. So depends on your high school, but probably. Okay? But I can tell you, I didn't learn calculus in elementary school. So anyways, in here, I can have the assumption of up. Because I'm here, and if you remember, when that announcement came out, I told you all about it and why, and that we could use like Aussie dollar, for example, as a canary in the coal mine for the rest of all macroeconomics. Does anyone remember that? Like it might, the Aussie dollar versus the US dollar might be the purest play ever. Because it's combining two central banking policies into one trend. Plus there's also some implied China in there. So if the United States and China start threatening each other about closing borders and tariffs again, you're going to see that very quickly in Aussie. Maybe less in euro, maybe less in pound versus dollar, but you'll see it very clearly in Aussie versus dollar, right? So you guys, everyone here knows all of this. So looking at Aussie Swissy, you could say, well, I'm a buyer here. This is OOP, okay? I'm a buyer here, I'm a buyer here, and I'm a buyer here. That's all factual. Every single swing trader knows exactly what all this is. And the cool thing is, and here's the liberating part for you newer guys. Okay? Because I'm preaching to the choir with people that have been around for a while. They know all this. But the liberating part, new guys, is that you know exactly what you don't want to do. Out of position. OOP, out of position. Okay? So you know exactly what you don't want to do, and you know what you want. Knowing what you don't want is incredibly important because you're like, well, I want to buy it, but I don't want to buy it here. Nice! Then the second part is, I do want to buy it. I don't want to buy it up here, but I would buy it down there. Now you're a professional. Now you're a professional. And it's also very, 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 very helpful, even if you don't trade a 4-hour chart. Let's say you trade a 1-hour chart or a 15-minute chart. You prefer intraday trading. You prefer spot trading. You prefer scalping. But this sets up the big waves. Whether you're surfing giant waves or you're out there boogie boarding. The sort of the catalyst behind your fun is generally the same. A-Rod says, would it be wise to trade on Fridays? I love trading Fridays. I love trading Fridays. In fact, if I'm trading Friday, I'm actually doing it based on Monday. And I showed yesterday in our Thursday group, even Thursday was in many cases too late for next week's trades. We met Thursday at 4 p.m. New York time, right at the New York close, and we're looking at trades for Monday, yesterday. And many of them were already about 6 to 12 hours late. So even Wednesday's trades, Thursday morning trades, try to get this. You ready? Wednesday night, Thursday morning trades are very, very, very often set up based on what you expect to happen on Monday. On a Thursday or a Friday, I don't even care about Thursday or Friday because the vast majority of the time I've already taken profit for the week. And so the trade I take on Thursday and Friday is based on my analysis of next week. And when you get there, like that's the first thing you learn when you go through the swing trading course, is you show up and you're like, holy schnicker-schnocker. This trades are set up 3 days, 4 days in advance. And you're like, you're no longer blind. You're like, oh, I get it now. I get it. You're like, ooh. Then you take your smaller time frame stuff that you might have been practicing for years, and it makes you even better at swing trading. And then I think swing trading makes you better at intraday trading because you understand the forces behind it. So like a Tuesday trade is significantly different than a Thursday trade. A Thursday trade might be worth 50 pips. A Thursday trade might be worth 150 pips. But you're doing the same thing on a small time frame. But now you know to like let her fly. Let the doves go, right? Let it do its thing. Right? You got to know when to hold them, know when to fold them. And so swing trading makes you a better intraday trader. But let me tell you, intraday trading makes you a better swing trader. And then once you understand the fundamentals, the complicated fundamentals like the RBA told you the Aussie dollar's not going to weaken anymore, you could just be buying and holding forever. Okay? Yeah, the 200 EMA is a target, not an entry. It's a counter trend target, but it's not an entry point. The reason for that, think about it, guys. If the 200 EMA is a fair market value, then when we are here, is it going to go up or down? Well, you don't know because, like, dude, seriously, bulls or bears don't know who's in charge. That's the fair price. And they're like, oh, that's fair. But if you're way up here relative to this, then technically it's overbought. So when there's profit taking, it'll fade back down to a fair market value. We call that a mean reversion. Okay? And that now becomes one standard deviation from a mean. That's the math. How far does price deviate from the mean before it reverts back to the mean? So that's now one standard deviation. Or you can look at it from the other point of view, is it does this now. And now it's oversold. And then once it's too oversold and there's profit taking by bears, it comes back and it reverts back to the mean. Okay, and now you got a standard deviation below the mean. Now you have a standard deviation above the mean. And now from that, you can create things like pivot points. See, it all comes together, right? But when you're here, where everyone agrees, is it going to go up or is it going to go down? I don't know. But I know when it's going up, it's doing this. And then when it gets too far and people start taking profit, then it reverts. And the opposite's true. Everyone's having fun here, and then, oh, profit taking, and they bring it back home. So when you're here, are the bulls going to buy it or are the bears going to sell it? Well, nobody knows. No one wants to make a move because bears like to sell high, bulls like to buy low, and it's neither for anybody. So that's why in my book I say, well, it's a counter trend target, but it's never an entry. This one? Yeah. Interesting, huh? Took me many years to figure that out. Okay, so we are now we are now one standard deviation from the mean. And I'd like this to go up. Okay? So currently, somewhere between this number and this number, I'm a buyer. $66.31, $66.16. I have a 15 pip range in which I would buy if I were me. Okay? It's a little dangerous because if you look at, right, we're still on this time frame from this data set from the month of September, we're still technically bearish. But remember, I'm okay with that because I'm a bull. Well, why is that okay? Well, I want to buy low. And then I see, you know, so 3 weeks ago when we were up here, I knew that one of the prices I wanted to buy was at 66. Look. It's a weighted mean, which means it's last month's middle adjusted for market sentiment. In this case, up. So I knew last month, even the end of last month, and certainly the first of the month here, I knew that as a buyer, this would be one of the choices I'd want to buy. Okay, so price reverted back to the fair market value, which is cool with me, but I don't want to buy at the fair market value. I want to buy at support once it's confirmed. So we hit it and check it out, straight up like a rocket ship. Down, and now this is what I'm interested in doing the rest of the month, and ideally next month too. Okay? If it collapses below, I now have to wait for the test of the next price lower. See, I know, so this is only my plan A. Remember, plan B isn't to sell. Plan A is to buy here with a reversal pattern. Plan B is to buy lower at that reversal pattern, right? We got that heckler at the beginning of the week. I think it was Monday. And he's like, oh, hindsight Wayne, plan A is to buy, plan B is to sell. See, I told you. No, you're not listening. Bro, if that's what you think, you're not listening and you're depriving yourself of, your destiny. Plan A is to buy here, if there's certain things we see. But plan B is to buy at a different price. But there is no plan B, sell. There is no sell. What do you mean? I'm a bull. How would I sell? And why am I a bull? Dude, do you not read the RBA statements? No. Oh, there you go. So what this chart tells me is technically there's still a lot of bears here, but that's kind of like backward looking. What I'm saying is I get that, but my job, even when we're here, is to say, this is the price I want to buy. Okay? That's it. Plan B is, hey, if it falls lower, I'll consider that too. So now what I'm saying is, if that's the focus that you have, okay, then you love the higher high, higher low scenario. Now bears are going to sell up here. We already know that. That's just a trend line. And bulls are 2 standard deviations above the mean, which means it's 95% overbought at bearish trend line resistance and near an M3, which is the price a bear would sell. So there's a lot going on there. You don't expect it to go up now. That's cool. Okay, like you get what's happening here for multiple reasons because you understand what a bear would do too. Not just what a bull. You understand the bearish point of view. Now you would say they're wrong because they don't read the RBA statement. They don't know things like risk on, risk off. To them, it's just another video game. Okay? So now if you're right, you will see this, which means it only became 68% oversold. What's another way of looking at that? Fibonacci. Okay? Fibonacci says buy if it's 62% oversold. Do you really think there's much of a difference? Do you think it's the golden ratio? Okay? You know what I say? 66% oversold. That's what I say. That's what Wayne says. See, I'm a genius too, just like Leonardo Fibonacci. Oh, I see the ratio between the scales of a lizard and how a cherry tree blossoms in the summer. And you're like, oh my God, are you high right now? Are you really high? I think you're high. You should like calm down, bro. What I say is 33, 66. Those are my numbers. If you can get a 33% discount, that's a good deal. If you can get a 66% discount, that's a great deal. Genius, 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 right? So whatever. So I have to now filter through all of this because that's strategy. Now my tactics are to buy a dip. Leonardo says 618. Statistical analysis tells you 66. Or sorry, 68. Wayne tells you 66. So I got to do the 66 and then 68 is in here too, right? Okay, and we're well through the 3A2. So you have to choose, right? Do you buy the 62, the 66, or the 68? How much of a deal do you need? I look at that and I'm like, dude, it's all the same, bro. You're like, well, I got a 66% discount, but I have to have a 68. Like, dude, seriously. What's the difference? 8 pips? 2 pips? Right? The point is you are buying a dip, ideally at support. And whether it's 62, 66, 68%, all you need is support. All you need is a miracle. All you need is you. Now, I drew these two prices, and that's good enough for me. Somewhere in there. It's not even a fib retracement anymore. It's the next, I think, daily pivot buying zone. So now we got like the next pivot buying zone. You got a Fibonacci retracement. You got a statistical regression. Blah, 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 blah. Whatever you want, you probably got it. The thing is you need to make a decision. Okay? So now you're on a 4-hour. You don't make decisions on 4 hours. So now you got to go in here. And when that creates a positive slope, you fire for effect. You're in the AO. Now you're waiting for the target to appear. How do you combat breakouts? Breakouts are one of the easiest things to do. You let it break out. You don't guess it's going to break out. You let it break out and you buy the pullback. Okay? Good day, Anthony. Okay? Yeah, free yourself. Hey, free yourself. What do you want me to trade? Now, first of all, these webinars are only like an hour and a half. So the likelihood of something developing perfectly at the right price with the right pattern in that hour and a half moment out of 24 hours is pretty low. Also, typically, New York is take profit time, not enter a new trade time. Okay. The best time to trade is Sunday at 5 p.m. And that's late for a Monday trade. So typically, what we're looking at here, free yourself, is that you should be looking at Monday. That's what a couple of these trades are, or prices. They're based on what we expect to happen on Monday, and that's what you should be doing today. Okay. So by the time we get to Monday, New York, we're well into the Monday trade. Okay. But I'm not a guy that's going to drop into the 1 minute chart or a 5 minute chart and like, oh, the stock market's open. Did you see that? Ding, 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 boom, boom, boom. Oh yeah, go, 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 go. That's not what I do. I know it's exciting, but that's not the right way to do it. Right? So that may not, what I do may not be exciting, but over the long run, as you develop the better skills of understanding how and why the market's behaving the way it's behaving, you will likely be a better trader, or at least a more confident trader to understand the why. Right? Well, here's the thing. This is very, 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 very clearly on an exact line, 66.31, guys. And I'm like, that's where I would buy if I were me. And then I spend 20, 30 minutes outlining technicals and fundamentals. And then we drill down into an entry, literally got a line in the sand here. What you do after that's up to you. Yeah, the $10 accounts. Well, the advice that I've given over all these years and even decades now is that if you seriously want to become a Forex trader, one thing you could do for free is trade a demo account while you study. And while you're going through that process, you save money. So that when you have 2 or 3 years of trading experience, you also now have some money, right? Because you've been saving money for 2 or 3 years, and now you're a pretty decent trader. And that's when you should move in, right? Okay. right? I always look at it as a business. I mean, I'm a businessman, so that's how I view everything. And that's how I looked at it when I decided to become a Forex trader and give up my job as a venture capitalist. It was not an easy decision. And it took me years to make that decision. But you can't start any business undercapitalized, right? So if you're going to balance the equation, you don't have a lot of money, well, you can get education for free or for cheap and put in the time to develop skills and save money. But now that money is not used on consumption, but investment. So it moves from the C to the I inside of GDP. And now you're acting literally as a business. Okay? Yeah, Punin says choice of funding currencies. Yeah, well, that's going to be, that'll be an individualized risk. Typically, it's the currency that you live with. If that's not an option, then most likely you should go with USD just because it's the one reserve currency in the entire world. And half the world's central banks are either influenced, or let's say more than half of the central banks around the world are either influenced or directly pegged to the US dollar because it's the reserve currency. So that's probably what you want to be exposed to. Otherwise, like if you're going with an obscure currency, it's like being a penny stock trader. Yeah. All right, well, we're 1 hour and 49 minutes into our webinar. What would you like me to cover next? What currency pair do you want? Or do you want me to do gold, oil, Bitcoin? What would you like me to do? Please let me know. You're the boss. A bond question? Yeah, if I can answer it, I will. You guys know if I don't know for 100%, then I'll decline. Let's go to commodities. Yeah, go ahead and ask. Oh, I don't have T-note charts, but I love the T-note. I watch it very closely. And I have traded it in the past. I used to trade 10-year T-note. But that was the year I overpaid my taxes by close to $150,000. And I realized my taxes were too complicated. I'm like, holy shit. Oh my God, that was such a funny year. Is the Fed keeping interest rates low? No, that's what the Fed does. Okay. So yeah, it's definitely the Fed. So like we don't even talk about it anymore, but the Fed right now is doing more quantitative easing now than Ben Bernanke did. Jay Powell's doing 120 billion a month, I think it is. Plus, he's keeping interest rates at 0.25. Remember, it's the dealing desk at the New York Fed that makes the interest rate 0.25. Okay? It's not a fair market value. It never is. But that's why bond dealers front run the Fed. So, that's free money. And the Fed loves it. So anyways. Okay. It's quite literally the dude on the trading desk at the New York Fed that makes interest rates what they are. All right. It's not law, but they will force it. Okay, gold and then I guess Bitcoin or something. Does anyone want Bitcoin? Or do we skip Bitcoin? So XAU is just kicking off that lower price. Remember, at the beginning of the week we were here. Then this was our buy. Then I said, if this does not break here, it's going to drop, right? So it dropped to this point, but I drew this as the future sell. If this holds, it's coming down, then it's going up, and then it's going down. Do you guys remember that? And I said, in the moment, we were right on the line. I said, this is the key moment. If it doesn't breach up here, it's going to come back down and we're going to trade it like a giant range. And of course, the price action is double top, lower low, lower high, roll reversal down. It's the opposite of what a bull would want. A bull would want, right? Roll reversal up. This is the RR. Okay. So anyways, that's why you draw this. This is the sell zone for bears. Okay. Rizwan remembers. Yeah. That's exactly the sell zone for bears based on price action. This is just price action, right? Think of it from a bearish point of view. First of all, they think down, so they're going to sell at the central pivot. It's factual. Okay? They sold up here, and they're going to do it again here. That's why we have the line here, guys. That's why we have it. So as a bull, I mean, this is the bullish line, by the way. This is the bullish line. We knew that. Okay? And this is sort of almost a neutral zone, but bears are going to try. And the real bearish, the real sell zone, and let's do a sell up here to match it a little bit. The real sell zone's up here. And we know bulls and bears are going to sell here. This is why you get like a battle. But there's a plan A and a plan B for bears. There's a plan A and plan B for bulls. Okay? Both bulls and bears want to sell here and buy here. Therefore, it's somewhat neutral. Okay? But what we know for sure, and let's see if I can get the other line in the sand here. There we go. We know for sure, for sure. We know for sure bulls want to buy this price, and bears want to sell this price. And a trend often is where you get down, and then you sell this, and then you get down, right? And then bulls do what they do, but then you break them, and then you get the trend. So right now, all we know is there are bulls in this market. We know that it's factual. And we know where the bears are going to sell. This is a selling line, but think of it as a moderate sell price. Moderately, bears would sell there. But it's very, very clear, right? It's very, very clear that they would sell there. Okay. So going back through the logic, we know the bulls are going to buy low, and we talked about it and set it all up, and we talked about it. And then it made a higher high, so then we set up the higher low, then it made a higher high, then we set up a higher low, then it made a higher high, we set up the higher low, and this is where I got very, very, very specific. It was a very long conversation. But we talked about it. It has to go up to maintain the integrity of this trend. And if it doesn't, it's very, 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 very clear it's because bulls have entered the market. And then, therefore, you would expect to breach the support because bears are involved now. They're going to drive through the support. They get to the next level, and then they're going to sell this, which is simply a role reversal. The same way we handled this process, the bears are going to do the same thing, and they're going to handle their process the same way. And we get back to this, right? And that's where the bulls need to kick in if they're going to defend their line, if they're going to defend their trend. If they're going to buy it at 1,900, then they better damn well do it. Okay, right now the number is 1915. Okay, so we don't know. Okay, I want to reemphasize, we don't know if this is going to fall or rise. Now, you might have an opinion on this, ideally based on fundamentals, as well as technicals, global macroeconomics, central banking purchases, whatever. Just make sure you got something, right? And then the next part is using technical analysis to confirm or deny your thought process. Okay? So this is very factual price action to be trading. And then it was very important that we didn't get higher. So now you're anticipating what the bears are going to do. And that's what I guess today's message is. You need to learn how to understand what the other traders on the other side of your trades are going to do. It won't make you a better trader, but it'll help you make better decisions, and therefore better decisions on the long run will make you a better trader. Right? So is it technically important that we double topped on exactly $1,967.70? Well, was it helpful to know that a week in advance? 2 weeks in advance? Was it helpful to know that? And that if we don't breach that, that's probably where you should take a walk if you're a bull. Take some profit, moveon.com. And the thing is, if you're a bull, where would you enter again? Well, that's a more complicated question. One is if it comes down here and turns back north, you have to start the whole story again. So do you buy here or do you buy the higher high, higher low? I suggest if it comes down here, wait for the higher high, higher low. But that's what we did here. We planned all this out days in advance. Okay? So you would have to do it all over again. Nobody likes to do that, but that's how it happens. Or it happens here. And this is even more ideal because you don't do sort of if you do this as a bear, you started high, you went low, you went back up, and you respected the resistance. This is pretty hardcore bearish. Remember, bears sell high, and we started high, and we immediately rejected. Then we get back up to, the closest sell zone for bears, and it does exactly what you think, lower low, lower high. Yeah, you would sell this and expect hundreds of dollars of decline in gold prices. Do you understand that? Oops, that's not what I meant to do. I wanted a higher time frame. Back out. Okay. If you are a bear, because this is now dead, we got everything except the breakout. Okay. So if you are a bear now and you started the month bearish and then you respected that pivot, yeah. Your target now is way down there, let's say at least the M1 to S2 zone. Okay? And that price, let me get it for you. This is going down to 18 or 1750. So if you sold at 1970, or you're going to sell now at this test of 1950, you're taking this down $200 potentially. I'm not telling you it's going to do that. But I'm telling you what the technical analysis is suggesting. But does the technical analysis tell you if central banks are going to buy up precious metals to devalue their currency? No, it doesn't tell you that. And what ultimately makes you your riches in trading and investing? Knowing that what the central banks are doing. And if you can, off the charts, understand if central banks are going to buy precious metals to devalue their currency so that their economy is supported by making their exports more competitive in the global marketplace because of macroeconomic conditions, then yeah, you might do pretty well. Okay? Because that would then indicate not this, that's just technical analysis from a bearish point of view. But if you're a bull because of the central banking purchases, then you are definitely doing this. You're on your way to instead of $200 down, you're $200 up in your point of view. And that's where we get the diverging opinions. Cool, right? So that was 2 hours of my life. I want to thank you for being here on a wonderful Friday, being part of the Forex.Today community, being a client of tradersway.com, being a student at fxbootcamp.com. Thank you for being in the community. I hope you have a wonderful weekend. I hope you learned something today. Please comment, please follow, please like, please subscribe, please thumbs up. Please document what you learned. What was your key takeaway today? We talked about many different subjects. Maybe one of them hit home in your brain, in your heart, in your mind, in your soul. Don't really know. But thank you for keeping me focused. Thank you for keeping me sharp. Thank you for keeping me motivated. Thank you for keeping me being inquisitive. I appreciate all of that. So you're a positive influence in my life. I hope I'm a positive influence in yours. Will there be off the charts with Wayne McDonald on the YouTube channel, at the FX Bootcamp YouTube channel? Yeah, probably. Probably. Cool. So, have a wonderful weekend. Take care, huh? Cheers. How do you get out of here? Ciao.